first half is in the books. Everyone, welcome to your latest Carson's Glass Half Full. Ryan and Sonu here as always. And next week, we're going to release our outlooks. We'll talk about how we see the rest of the year playing out. But for this week, we're going to talk about what surprised us in the first half of 2026. Are you surprised the U.S. lost, Sonu, in soccer?
You know, if you had asked me, that's a curveball.
You didn't see that coming, did you?
I didn't see that coming. If you'd asked me before the tournament, how far we'll make it? I'd say, round of 32 sounds about right. We'd be extremely lucky, given our opponents and things like that, to get to the round of 16. And if you told me, you know what, Belgium's going to be our opponent in the round of 32, I'd be like, it's going to be a bit of a struggle. But path dependency, as we know in markets, is everything. We had a good few matches. We came into the round of 32 match with spirits up. I think spirits are up in the team. Spirits are up in the fan base as well. Of course, there's a lot of noise around the team with suspensions and red card overturning and things like that. But set that aside, maybe that noise contributed to Belgium coming into the game really pumped up as well.
But you follow us way more. I thought it was around a 16. I thought we made the 16. Not the
yes, round of 16. Yes,
see,
we didn't make the quarterfinal. Yes,
I know what's going on. You're still so shell shocked.
I'm losing my numbers there.
You don't even know. You don't even know. But listen, let's dive into what surprised. I'll kind of start. We'll just kind of bounce around. We'll bounce around. Listen, at the middle of the year, the S&P's up 10%. Okay, that's a pretty darn good year. We've said repeatedly we thought it'd be a pretty good year. I think what surprised me, Sonu, was the fact that crude oil virtually doubled overnight, which we've said this before, but that's a six-standard-deviation event. It's supposed to happen once every 4.1 million years. Well, that's kind of a surprise. The market had a pretty big pullback, but nearly just as quickly, and this is how markets work, everybody, bad news is out there. The markets looked past that bad news, and we had one of the largest, fastest, most aggressive 2-month rallies in the history of the stock market, all taking place while there was a war raging halfway across the globe. So that's one surprise for me. What surprised you?
I'll use markets here. So the S&P 500, as you said, up 10%, just over 10%, including dividends for the first half of the year. And if you'd asked me, maybe even you at the start of the year, does tech participate? I would say yes.
Mm-hmm.
Is it going to be an AI wave continuing? That's literally what we wrote in Outlook. That's what happened, right? The technology sector was up almost 33% year to date. It had a massive second quarter. Right. And in a second quarter, the midterm years are supposed to be, pretty ugly. Right. It's the worst quarter in the presidential cycle based on your work.
Mm-hmm.
But the Mag 7, the Magnificent 7, was down close to 4%. On a cap weighted basis, these 7 stocks were down 4% at the 6-month mark of the year. That is surprising to me. It doesn't mean the AI wave wasn't there. It was there. In fact, it built up a lot. Chip stocks were up a lot. Momentum was riding that wave. Momentum's up massive over this, first 6 months of the year, especially in the last 3 months, Q2. But the Mag 7 didn't participate.
No, that is surprising. If you would have told me Mag 7's negative first half of the year, I probably would have said, I bet we might be having a rough year. But that's not the case, because what happened, the broadening out theme, and that was one thing we expected. So this wasn't a total surprise, but I'll tell you, at the middle of the year, Sonu, what were small caps up? 22, 23%, somewhere ballpark there. Mid caps were up in the mid-teens as well. So this broadening out theme, which we expected, is played out even better, I think I'd say, than I expected, or maybe you expected. And that is another pleasant surprise. Then you look around the globe, and maybe again, not a huge surprise to see this, but the U.S. up ballpark 10%. Most developed countries, definitely most emerging market countries, have done better than that. So the U.S. lagged last year on a relative basis, and so far the first half of this year has lagged a little bit as well. No one's complaining about a solid 10% the first half, but I think that's a little bit of a surprise. I mean, I wouldn't be shocked at all, though, the second half of this year, Sonu, we're going to talk more about that next week, but maybe the U.S. kind of takes back the baton and leads the second half of the year, but we'll leave that discussion for next week. Maybe a couple more. What else surprised you?
This is sort of roundabout, but what surprised me was how everyone's surprised that inflation's pretty hot.
Yeah.
And you mentioned oil. Well, of course, oil went up, oil's back down, but gas prices are up, still up. Gas prices are well above where they were before the war, but oil prices are mostly reversed. Never mind, there's some noise over the last 2 days about the war starting back up again. But for the time being, oil prices are pretty much back to where they were before the war, or not far above that. After rising all the way to $100, $115 a barrel, it's back down to about $70 a barrel. This is WTI crude. And you would expect, okay, people got worried about inflation. And usually when that happened, bond yields go up. Bond yields go up, bond prices go down, just the way they work. It's inverse, right? Now you think, okay, oil prices have gone up, gone back down. Bond yields went up. Maybe they've come back down, but no. They've continued to go up, which tells you that suddenly everyone's recognizing that there's an inflation problem. And this is not an inflation problem that is just because of energy prices, because energy prices are reversed, right? It's not about tariffs either. There are AI-related bottlenecks happening in the economy. There's non-housing core services are running hot, which tells me that the labor market is probably better than everyone thinks it is, right? But yeah, that's another kind of, does that work? It's a roundabout surprise.
Yeah, I mean, hey, it's our video. We can call it a surprise if we want to call it a surprise. Let's see, one more from me, and maybe I don't know if you're done. You're scraping the bottom of the barrel with that one. That's easy. I think the one you mentioned, tech, right? Tech up about 32%, give or take, over 30%, we'll say, the first half of the year. I mean, that's probably a surprise. I mean, we thought tech might do well. I didn't know if they'd do quite that well. But the other side of tech, kind of the cousin to technology, communication services. There was a time, not that long ago, like most years, where those two kind of go the same way. Because again, communication services is tech adjacent. Obviously, there's tech. There's some similarities. They're in the same ballpark, is what I'm trying to get at. There's 11 sectors in the S&P 500. At the middle of the year, the best was technology. The worst was communication services. I mean, that genuinely surprised me because I would have assumed the two would kind of be more similar. Now, as we reach the second half of the year, I wouldn't be surprised at all if communication services kind of played catch up, as we move forward. But that was a big surprise to me, Sonu, to see that. What's one more surprise if you can come up with something?
On the inflation front, I mean, and picking up from bond yields, I mean, bringing policy into it.
Yeah.
Right. I think a big surprise is, that I think everyone's primed for the Fed to raise rates this year.
Yep.
Right. And at the start of the year, it's not quite a surprise, but I would say the market is surprised. Let's call it that way. The market is surprised, which is why at the start of the year, the market is pricing in 2 rate cuts.
Yeah.
2 more rate cuts by the Fed. And now the market's expecting 100% probability of a rate hike. That's a big switch. That's a big shift in 6 months, right? Actually, I would argue it happened in 3 months, right? And that's because of the inflation picture. So I think the market was sort of blindsided there by what happened.
Yep.
But we've always been in the camp that inflation's a problem. You're likely not going to get any cuts. And at this point, we are on the other side of the market as well by saying that we don't think the Fed is just ready to hike yet. They may, if the inflation data gets worse. But for now, I think the majority of the Fed is going to put their hand down on the side of, we think inflation is going to be, quote unquote, transitory. Right? The Fed's not ready to be surprised yet by, I would argue they should be what's concerned about inflation, but they're not. But the market is definitely surprised and, dare I say, blindsided.
Yeah. I mean, you've done a great job on that call because, again, 6 months ago, the question wasn't when will the Fed cut? It was how many times. And you've said, listen, it's going to be a lot harder for them to cut than the market expects. And now here we are 6 months later. It's a complete 180. Everybody's saying how many times the Fed going to hike? We're saying, maybe not so fast. But I think I'll sum it up like this. And you kind of hinted at this in one of your earlier answers. What surprised me and you and us, every year is surprising. Every year is bad headlines. Every year is volatility. And then it happens. And everyone kind of freaks out, right? Plans are useless. Planning is everything. President Eisenhower, one of my favorite quotes, do yourself a favor. The second half of the year is coming. We're going to talk more about it next week, but I'll just put it this way. Expect more volatility. Expect more headlines. It's a midterm year. You think it's going to be nice and smooth these couple months ahead of a midterm election? No, probably not. We're going to have some big down days. We're going to have some worries. That's perfectly normal. Even some of the best years ever have had some pretty significant down days and some pretty significant drawdowns. And maybe that can happen again in the second half of this year, but it's still a bull market, which again, we'll talk more about next week when we officially release our mid-year outlook. So with all that, everyone, thank you so much for watching these weekly videos. This is the latest Glass Half Full. What surprised us in the first half of 2026? See you next week with our mid-year outlook release. Take care, everybody. Bye-bye.